Hi, I'm Darren Long from Delta Harbour Assets, and this week's Money Show. Welcome to 2023. What's in store for gold and silver, and what does a fool's gold look like? We're going to talk about that and much, much more, as well as the dreaded topic of the day, recession. But gold and silver look good, and we're going to talk all about that. Welcome to 2023. Let's get started.
There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey, everybody. Welcome back and welcome to 2023, right? The first Hard Money podcast of the year. So we're going to get started right away. You want to reach out to Darren and the team anytime and discuss that part of your portfolio, which may not have been cracked open yet. That would be the hard money part, right? The gold and silver and those types of metals in physical form, by the way. These aren't just tickets and papers and stuff you can look at on your computer. You got to hold this stuff or you can store it. We'll get to that later, but it's real physical metals in the form of gold and silver and some others as well. Have that discussion with Darren and his crew anytime. 1-877-323-GOLD is how you do that. Of course, deltaharbor.com. And that goes for all the usual social media outlets, including this one. If you're watching us on Instagram or Facebook or Twitter, YouTube, Apple, Spotify, wherever you get your favorite podcast, it'll be there as well. So obviously, Darren, we're going to spend some time kind of looking forward to what you think is in store for gold and silver in 2023, but we would be remiss if we didn't kind of catch up in the tail end of 2022. What do you say, pal?
Well, listen, welcome again to 2023. A big happy new year to you and our listeners. John, it's good to be back, and we had a nice little hiatus and a little break. First one I've taken where I've had a week off at Christmas since 2008. So it's been a long time coming. Yep, first time.
Same.
And even though we own a business, we run a business, sometimes you need that downtime to recover. And we had a busy 2022, our best year on record, thankfully. Yep. And huge thank you to all of our clients and clientele and those listening who just take some time out of their day to appreciate a point of view that somebody's sharing. And especially we know that there are lots out there in this day and age, John, with everybody's voice being heard seemingly on every type of social media platform. So for those that do take some time to listen to this, we greatly appreciate it. And honestly, John, 2022, in a nutshell, transition year in the global economy. And we talked about it. And early on in the year, we mentioned it. We knew recession was coming. We used the dirty word several times. We even talked about stagflation and where this is heading. But whether you listen to shows like ours or not, might have been the difference between maybe taking some profit off the table last year and leaving it in the trenches to hopefully do what you had hoped the headlines told you it would, which was to build and build, that this was not going to necessarily be a transition year. And I mean, I listened to the radio this morning, Tiff Macklem, head of the Bank of Canada, our central bank here. I mean, crazy to think that just a few months ago, this was a man who was touting the fact that, interest rates would not rise, that, interest rates would be low for years to come, that people should feel free to borrow, that this is an excellent time to do so. And little did they know they were going to get whacked over the head as hard as they did. And the biggest challenge now is looking forward. So if we look at last year and the year that was, the biggest and most important thing to understand for us about 2022 was the fact that gold and silver accomplished everything they were meant to while remaining somewhat grossly undervalued against a sea of loss in the more traditional markets. So if you look at gold and silver overall last year, gold and silver were higher in every single major currency that matters. And they outperformed stocks, bonds, cryptos, and specifically Bitcoin in particular. We'll talk a little bit about that today in a significant way, as investors really fled the risk assets and again sought shelter in gold and silver versus what happened in the rest of the market. So if we look at the overall market, S&P 500 in the U.S. was off 5.9% in December alone, finished the year down 19.5%. Dow Jones Industrial Average finishes the year down 8.75% for the year. S&P Midcap 400 lost 14.5%. S&P Small Cap 600 lost 17.5%. And the S&P 500's index had its worst down year, which was more than 19%. And that's the S&P 500's first double-digit percentage annual loss since the index slid 38.5% in 2008, which was a horrible year all around. When we're talking about Bitcoin, the digital gold, it's what it was touted as, supposed to be. It collapsed 64% last year. Right. 64%. And it clearly showed everyone that it is not a safe haven asset or indeed a currency as of yet. Other cryptos were down by more than that, with some going to even zero last year, a number of them, as the crypto sector really experienced mass liquidations by very nervous speculators, realizing what they owned, John, in fact, was not digital gold or anything like gold. It was fool's gold. So ultimately, that was a tough time. In Canada, if we look at our benchmark indice, the S&P TSX composite, that was down by 8.5%. Again, not huge, but not as bad as its U.S. counterparts, but still down. We lost money, right? And some individual sectors, especially in tech sectors, lost a ton of money. Canada's main stock market index had a very, very volatile year. But the biggest drag on the index, came from the areas we saw deteriorate over the year, which was healthcare, technology, in real estate sectors. So it was huge. And against that backdrop, of course, gold was plus 1%. Silver also plus 0.5% on the year. And what they did last year, as opposed to focusing on the fact that they didn't rise 30 or 40%, they didn't lose any money. They protected your wealth and helped balance your loss if you owned them. Right. And they restored a lot of people's faith, John, in their ability to protect and insure wealth against the rigors of inflation that hit us hard last year and continue to do so right now. And they have a tremendous ways to go. I mean, a tremendous ways to go on the upside. So if you're still thinking about the market, this is why we own them, as a way to diversify our wealth. And like I said, if you own them in 2022, way to go. It was a great year for you. You protected your wealth, diversified it, and you have a tangible asset, something that is not a piece of paper.
Again, guys, 1-877-323-GOLD to reach out, have that conversation with Darren and the team. Take some time, grab a coffee, sit down in a pen, and learn lots when you make that phone call before you start investing in these physical metals. Well, you dropped the R word already, man, the evil R word, recession, and obviously into it now. There's no masking it, but has it become any clear that you, I assume you did some analyzing over the holidays of what's to come. Has it become any clear to you how much of a shit show this is going to become in 2023? Or because you can't go to the usual media outlets because they're shoveling it deep. So we got to rely on better sources. What do you think, pal?
Well, I think it is. I think it's a clearer picture now, John, for sure. And we expect contraction. We said before Christmas that we also expected contraction, but it wasn't as clear. The picture is far more clear now.
Okay.
And if you look at those traditional media outlets like JP Morgan, et al., their friends, all the banks, the big bankers, they're looking for a 1.5 to 1.6 jump in overall GDP, and one might expect from that statement that, hey, this is a growing economy, growing world economy, and they'll tout this as a positive. Headline news will push that this is a positive. You'll get lots of people wanting to state that they believe there is no recession at all. You'll hear amazing people that you trust say no recession at all this year, but behind the scenes, John, unfortunately, behind the headlines, it's a far cry from a positive situation, because all the warning signs are there and they are in place and they're hitting us left and right. Global drops in or contraction in GDP, or when GDP is below 2.5%, historically are considered recessionary. So even though regionally here we might get a negative GDP reading or 2 quarters or more, which is traditionally how we define recession, there is going to be a global growth of only about 1.5% if we're lucky. And it could get a lot worse depending where we are. Expect there to be both economies of the world who suffer deeper recessions, but some that are a slightly bit more mild because, of course, what do we know when recessions happen or downside happen? The new norm is to simply print more money. So what's on the table? Quantitative easing by year's end, as soon as interest rates continue to fall a little bit too. If we get to that peak moment, which we think will hit by end of 2023, we should see some quantitative easing happening. So we expect interest rates to remain stubbornly high over the year, but we also expect continued contraction in stock values related specifically to sectors that perform poorly during down cycles. That's pretty much any sector that is not providing something that's necessary per se. Tech sectors, certain parts of the health sector, non-obligatory health companies that produce things we don't need, but we can use in luxury situations or that we might use to help better our lives, but are not necessarily compulsory. Contraction in lending, we expect that to slow because let's face it, if you bought a house over the last 2 years, odds are 65 or more % of your income is going to house related things. Doesn't leave much room for anything else, let alone going out to spend disposable income or build businesses or help to grow the economy. So we expect a contraction in lending and a decrease in overall liquidity. Will we have a liquidity crunch similar to 2008? Yes, it's possible. It's wholly possible. Will they throw money at it? Hand over fist. If tomorrow we woke up and there was a major pullback in the stock indices around the world or in the major markets, the G8, you would instantly see money being printed. We would have a halt in interest rates and be a catch-22. It's a really, really devastatingly fragile situation right now in the world economy. And really what we're seeing is that this is the year of survival mode. So we're going to hear about mass layoffs. We're already hearing about it, especially in the tech sector. Look at the banks and the layoffs they've announced. Look at the tech sector from Amazon through to Spotify, through to Shopify, through to all the major tech sector players. They've all announced huge layoffs, Twitter and all the other companies that did before Christmas as well, because this is survival mode. This is where we go when we have to take in the unfortunate joy of the holiday season and have it replaced by the realization that first quarter loss is going to be steep. And so those signs of weakening are everywhere. In addition to that, we might add that most of the global purchasing indices, the PMI indices, are now in contraction territory, which indicates a deepening downturn across geographies. And economists, a lot of the mainstream economists who otherwise don't have any say about gold whatsoever, they're warning that there is a material recession risk all over the place, not just those economists that deal with gold and silver. Especially traditional banks, JP Morgan, Chase, Bank of America, RBC, Scotia, a number of them, even the ones right here at home, as I said. So excluding the global financial crisis of 2008 and 2020 with COVID, this would mark the slowest pace of global growth in about 4 decades during this year if we get what we expect. Wow. And it would meet the IMF's previous definition of a global recession, i.e. growth, as I said, below 2.5%. We personally believe it's going to be deeper than people suggest. And what needs to be realized here is the amount of actual growth we just experienced based solely on debt versus real organic growth. When that skin gets peeled back, John, when that skin of all the lending and all the borrowing we did and all the fake money that was printed that mimicked real organic growth, when that gets peeled back, what happens? Lenders come calling, right? When you can't pay for your mortgage and when you get it renewed, at 2 and 3 times higher rate because you chose variable rate, and you didn't lock in at the lower prices, that's going to hurt, right? That's money you have to come up with that you didn't have to just 4 or 5 months ago. In some cases, double the payment, maybe even more for a lot of home buyers. And as that skin gets peeled away, that's painful. So we want this to be a big year for people paying attention by owning and diversifying with physical gold and silver. I mean, historically, that's what it's for. And in times like this, we'll get these very climactic moments, and we'll talk about it, where we're going to see huge booms in prices. So gold would easily not surprise a single soul in this sector of economists that deal with gold and silver, talk about it, or analysts that talk about gold and silver. It wouldn't surprise us to see it go 2,500 plus this year. Some are calling for it to move even as high as 4,000 an ounce over the next 48 months, which is huge. And I totally believe that that's more than possible. And I'm going to be here for the ride, as are our clients who are smart enough and astute enough to consider this, research it, and own it for themselves. Real physical gold and silver.
You know, it's interesting, recent announcement by the city of Toronto, this massive uptick of land taxes coming down the pike, a
Mhm.
huge one, biggest in decades, really 2008, I think they said that, and that's not going to stop. You'll see more hikes over the remaining tenure of John Tory's reign for sure. It'll be another 2.5 next year. Watch another 2.5, and his last year probably another 1.5. That plus, if you look at even the car market, used cars 7, 8, 9% interest rates, 0% rates are gone, bud. Like it's like, and that plus Scotiabank saying 2.5% of their portfolio is going to be underwater with people owning these homes are going to default. All this is bad news. How about interest rates? Do you see any relief at all, or is it just going to keep going, level off? I know you mentioned it earlier, but it's not going to be good for a lot of people, brother.
Well, to anyone expecting the Fed or our central bank to step in and realize that rates have been excessive, or to rescue the markets, or come in and suggest that there's likely to be a downside on the rates coming before the year end, I don't think there's any dovish pivot that's likely to occur in 2023. We're not going to see some brand new boom occur from somewhere. Rates will perhaps not go much higher, but they will not be pulled back in 2023 by any magnitude. They're here to stay for a while. And remember, the impact of this is felt only when we look at a comparison model. Rates have been much higher. I mean, our parents lived with rates that were double digit. Some people had mortgages that were 20, 22, 23%, which to me, I mean, I can't even fathom that. But the reality is, back in that day, when homes were only worth 3 to 4 times what we were making in income, we could afford to pay those, right? Because we didn't have as much of our disposable income going to house related costs.
Right.
Now, in this day and age in 2023, homes on average are 7, 8, 9, 10. And then in the core areas, the heavy demand areas, Toronto Centre and others like it across the country, you can see mortgages and home values that are crazy. They're nuts. People making, 150,000, 200,000 a year combined income, and owning homes that are 1.5, 1.6, they're 10 plus multiples of their income. And it's ridiculous. And this is the reality that we're faced with right now, the struggle, and it's real. It's here to stay. And unfortunately, we're going to see a whack of foreclosures. How those get spelled out or shown in the headline media, who knows? These bastards will put a positive spin on it somehow, right? They'll say, "Oh, look, it was not as bad as we thought it would be." Well, to me, it's like saying, "Hey, there were 30 deaths, but
Not 31.
it's better than we thought 31, right? It's not 40 like we thought there might be, right? I mean, there's a positive spin to everything, and I'm not trying to be negative. We try not to on this show, but the reality is that nothing significant will be realized in terms of down interest rates, or this will not get easier for us because they can't afford to do it. And historically, John, when interest rates rise, we start to see a resurgence in people buying gold and silver. I don't want people to think about 2008 and beyond. I want people to think about 2002 up to 2008, where our interest rates rose and peaked.
Right.
And this is something that nobody thinks about. Gold and silver, as those interest rates were rising under Greenspan in the US and here at home in Canada, as those rates were rising, gold and silver were double and tripling, right? We don't really take this into consideration when we're looking at historically what the challenge was. So now, as interest rates have risen, gold and silver are back on as people are flocking to what can protect and ensure their wealth. And this will be no exception. If we look at gold over the last 18 years, up 480%, right? It's only had 2 losing years in 20 years, John. 2. That's it. And so if we look at it from that perspective, we then say, well, what about silver? It's up 410% in the same amount of time. These jumps in price have occurred with just about maybe 2% of the global investing community getting exposure to gold and silver, paper or physical. And so imagine what happens over the next 4, 5, 6 years when 10% of the population, just 10%, right, decide to jump in and buy some physical gold and silver. And believe me, the demand and the way in which news and the internet have made this easy to understand and known to the rest of the world, it wouldn't surprise me if we woke up tomorrow and that occurred. So, I mean, prices, let alone whether or not we have enough gold or silver available to even, cover that demand, they would be sky high. They'd have to be astronomically high. Silver above 100, gold above 5,000 in order to accommodate that demand. And so that's where we're heading. That's what's about to happen. And people have the opportunity to get onto this boat right now.
Well, it's interesting that you made that pivot back to gold and silver specifically, because you've always maintained it, Delta. This is long-term ownership. You're not just going to flip this sucker like a real estate property you thought you'd cash in on. That's not what this mechanism is for, is it?
No, it's not. And remembering where we've been and where we're heading, and those terms like recession and things like that, this is an absolutely true statement. It is long term. Let's face it, gold has been around as a silver for thousands of years.
Yeah.
It's gone nowhere. It's always been a part of economy since it was discovered. It's always been used as a medium of exchange. It's always been used to protect and shelter wealth. And it's always been used culturally or otherwise to denote wealth. So it shows wealth. So what do? We don't boast about the amount of paper money we have. We boast about the gold we own, especially as a central bank, right? Central banks, net buyers of gold. Why? Well, if they tell you this and if they let that stream through the economy and that goes all the way bleeding down into the people who speak about your money and manage your money and finances, what would happen? People would buy gold. It's a finite resource. It can't be printed. Same with silver in the physical form.
That's right.
It would blow up their paper reality. That to them is their reality. To me, it's a bunch of absolute bullshit. So yes, gold and silver is for the long term. We don't buy this to sell it tomorrow. If you want to do that, go speculate on something like Bitcoin, right? Winners, losers. For every buyer, there's a seller. But ultimately, gold is there as a mechanism to protect wealth, to ensure wealth. And anybody who tells you otherwise, either A, they don't understand the story of or history of gold, or they're bullshitters because they're selling something else. They're selling themselves or a book or some stupid thing that they're trying to talk people into. And unfortunately, this is why in part gold gets overlooked, because it can't be manipulated as easily as a paper asset. If you look at the manipulation that has alleged to occur in gold and silver, where has it occurred? Not in the physical form, not in bars, not in coins, not in what we offer to our clients. It's occurred in the paper market, right? And yeah, that unfortunately bleeds off and impacts the physical price of gold and silver. But the fact is, it still only happens in the paper market, right? The amount of fraud in physical form is minimal. Maybe it's higher than it used to be because more people see it. And fraud is inevitably part of every market in the world. But when I look at gold and silver, what the hell else has stood that test of time? What's been with us that long? For God's sakes, right? Nothing. Nothing. Gold and silver. That's it. And so that is the world's medium of exchange, whether anybody wants to admit it or not. And so when we look at the long term, yes, we have no idea what tomorrow's markets will bring. Nor can our guesses about tomorrow's inflation that we're discussing be relied upon for the perfect lead. A lot of what we thought had value in stock and real estate is now quickly becoming part of yesterday's story. And why leave that to chance? Why be the last one to react to it, right? We're just trying to essentially connect the dots here at Delta and to understand what is going on. And we look for the primary trend, but here's what we see. This is especially pertinent to 2023. Every single asset class except for gold, silver, platinum, and a handful of other commodities finished deep in the red last year. And this is what we would call perfect storm territory. And it finished deep in the red as a perfect storm. As we saw inflation slowing global growth, we saw an energy crisis start to develop and continuing right now to develop. We've got a food crisis, which is happening. We've got deepening supply chain problems. We've got war. We have the risk of a world war, which all badly impacted risk assets. Gold and silver bullion, once again, though, demonstrated their long-term safe haven benefits to investors and exactly when they needed it as a hedge against all of these other problems and concerns. And again, I hate going back on history, but history repeats itself, right? It comes to fruition every so often on these big cycles. Since 2000, gold has frequently fallen briefly at the start of a bear market. What happened last year? The start of a bear market, right? When we saw the stock indices and everything started to peel back, the beginning of a bear market, the ugly word of recession came to light. And when there have been global crises such as those we saw after 9/11 attacks, the collapse of the Lehman Brothers in 2008, the EU debt crisis and the printing crisis here in the US and Canada, gold tends, and silver for that matter, tend to be somewhat correlated with these risk assets in the very short term. But soon after, they decouple and they make strong gains while risk assets fall further or enter very big extreme bear markets. Recession is one of those types of bear markets. So we expect gold's recent outperformance to continue, and silver into 2023 in the next few years as it resumes its secular bull market and stocks and bonds enter secular bear markets. And that's just what we see, and everybody's seeing that right now. The US dollar strength is about to end. 2022 is likely the last year we saw dollar strength. In 23 and 24, we expect the US dollar weakness to continue, and it will contribute to further gold gains. Remember, gold is the antithesis of the US dollar. So goes the US dollar. The opposite happens to gold, and that's historically a correlation that you can look at for, a long time. Certainly back since the US dollar was placed as the reserve currency. And when it was unpegged in 71, of course, the US dollar got printed, it lost value. And during that decade up to January of 1980, gold rose in value up to 850 from 35. Silver followed and earned even more on a percentage basis. Now, this year, as I said earlier in the show, there have been a number of forecasts. I've read some that I believe wholeheartedly factual, based on real data, that suggests gold could rise as much as high as 4,000 an ounce this year. To me, that's a little bit crazy. Certainly, it's a promise of good things to come, because it's based and predicated on certain things that we're seeing that happened that are negative, recession and loss of value in the traditional markets. But if you look at the gold picture, there's probably 50-60% more analysts now 12 months later than there were in January of last year that are now saying and accepting that gold is going to go higher. You got banks stating it. You got the likes of mainstream media, guys like Jim Cramer and others touting that gold, hey, not a bad idea to have some gold in your portfolio. So when that happens, it's only a matter of time when people run to it. And these fears about the economy, they're going to persist. And many economies are going to face recession during this first quarter. They're going to face a slowing economy, slowing growth, slowing manufacturing, slowing production rates. Employment's going to slow. Definitely think it's going to slow. You're going to see much more in the way of layoffs come in the first quarter. The tech sector is one, health sector is another. Lots of that happening, but it all ends up making gold more attractive. And we've had the likes of JP Morgan and Scotia and TD and RBC call for higher gold prices this year, higher averages. Just had this week, Jörg Keener, who's the MD of Swiss Asia Capital, come out and say that he expects gold will be far more attractive this year to the average retail investor. And we're gold to more than double in value in the coming months. I would expect silver to see even greater gains. Yeah. So if gold was to go from 2,000 where it is, 1,900 now, up to 3,800 or 4,000, my gosh, silver could hit between 50 to 100 an ounce easily. And that's where we expect these prices to head, John, if not this year, certainly into 2024 and beyond.
We've been doing this long enough to get around simpatico with what you're saying. I get it all, but for anybody listening, maybe just tuned in, this is their first time reaching out. What's your general conclusion at the end of all this?
Well, people should be taking advantage of it while it's here, John. That's for sure. This is a valuable time to prepare, and we're in what we call the calm before the storm. The headline news is not going to ever, or very rarely will they allude to recession. You'll talk to analysts who make a living from things going higher and getting better. You'll talk to planners, advisors that are all making a living from things going up in value. Real estate agents going up in value. Yes, they're around when it sells, but they make a fraction of what they make on the way up. So
Yeah.
you're going to see a lot of that, but people should behind the scenes be taking stock of what they have, what their losses were last year. They should be sitting down right now. It's RSP season. Here we are in the new year. You've got until March 1st deadline to contribute to last year's RSP. And so we want people to do that, our client base, to consider what additional funds they are going to allot towards their RSP, and then see whether or not gold and silver have additional room in their RSP to be entered into. And this year, you're going to hear a lot about digital currencies because it's a way in which governments feel they can take back control of their plan, their master plan, to make certain that they know where every penny, every dollar is. Again, making gold very attractive in terms of being able to keep it private, keep it stored and out of the way of prying eyes. And personally, for me, John, I love gold, but I am like a kid on Christmas morning when it comes to silver bullion.
Silver. Yeah.
So that's the big one for you. If you're listening to this podcast right now, silver remains undervalued relative to stocks, bonds, property, gold, other assets. And this is seen in the gold to silver ratio, which is sitting today as we tape this show at around 79-1. And silver is the only asset of significance that remains less than half its all-time price of $52 that we hit back in January of 1980. Of every other commodity that hit their highs back then in that last major super bull market for commodities, including gold and silver, are at their all-time high or beyond. Gold is more than twice the price it was in 1980. Silver has yet to get back to that all-time high.
Wow.
So we think we should consider silver a lot more this year. We think it's going to grow a ton, and the early stages of 2024 will be an indication of exactly how much. Would not surprise me to see a 20 to 30% gain plus in silver this year in terms of the price rising.
1-877-323-GOLD is the way to call through. Now, you should know this by now if you've heard this show and you're starting to learn something. It's not just make that phone call and grab your credit card. It's about education, right? You want to make sure you got all your T's crossed and your I's dotted. So as far as convenient ways, methods, other than you just briefly spoke about the RSP and TFSA and other accounts, but some more convenient ways for people to get this happening as we wrap up for today. Darren, what do you think?
Well, the simple way to start, John, is just using the website. Go and take a look at the products, call us, ask questions, get to know the product a little better. Some products are cheaper than others. We'll explain why. We'll talk about the ins and outs of storage. That's an option for you. Delivery home, that's an option for you. And we'll get you familiar with why the different pricing, the different structures. What does it all mean when you see two different types of products? Are all 1 ounce gold bars the same, or is there different types of 1 ounce gold bars? We'll educate you to the fullest extent, and that education will be ongoing as you're a client here with Delta. And we'll talk about those two options in addition to the TFSAs and the RSPs and the LIRAs and the pensions. Even if you have them elsewhere right now, you can bring them over to Delta. We'll teach you how to do that. And if you really are sincere about wanting to own an asset like gold and silver, protect your future, and have it available to you upon retirement, instead of withdrawing cash and using something that might be worthless to you at the time, you can withdraw gold, withdraw silver, take that home instead, put it in safekeeping, pass it on to the next generation.
Nice.
Out of prying eyes. Once it's out of that system, you are going to have an asset which is tangible and can be shared with the next generation. We have that option as well. Our partner in that is Questrade, a great partner to have, and we'll set you up that way, and everything will go through Delta Harbour directly. And so we can help you with that as well. In addition to that, we also offer the Delta Vault account for those that are not interested in really worrying about the bar types or, whether or not they need a 100-ounce bar or a 1 ounce bar or which brand or anything like that. We take a whack of gold and silver and we vault the product. And then we make that available to you, the buyer. And so what does that do? It means you don't have to declare what type of bar or what weight you want. You want 1,000 ounces of silver? We'll give you 1,000 ounces of silver at the lowest price possible, which means you're not paying those bar premiums. You're not paying those high potential commissions that other firms might have. You're actually just getting physical products stored in the vault. And if you want to take it home at any time, you can convert to 1 ounce bars, change it to 10 ounce bars, change it to 100-ounce bars, do whatever you want in gold or silver. Combine your products, have both gold, silver, maybe have some platinum and palladium in there. But this count will definitely by far give you accessible, tangible, hold in your hands, real physical silver, gold, and it will allow you to avoid the high bar premiums. We set up this account. We've been using it since 2002, and it is a great way to amass wealth while not having to worry about those ins and outs of the bullion market. And that option is available to our clients as well. We'd be happy to share some light on that. But it all starts, John, with a simple go to the website, use the phone number, and use us throughout the process. Stay in touch with us. Listen, as happy as we are to have you come in and acquire bullion from us, help you store it, help you get it into your RSP and do all those things, we're just as happy to start a friendship, start a partnership with you to explore all of your wealth, to understand it better, to get to know more about who you are. And heck, if you just want to talk about the kids' hockey tournament, oh, hell, we're here to do that too. Before we go, John, today, I will remind everybody it's a new year. The trouble has just begun. There's a lot happening right now behind the scenes. Take care of your local community, right? I know we give to big charities all around the world, but sometimes we need it most right here at home in your own community, whether you live in Ajax, whether you live in Oshawa, whether you live in Quebec, whether you live in BC, whether you live right here at home in Toronto, wherever you are. Take 5 minutes to donate to your local food bank and take care of your neighbors, because this year more than ever, they're going to need it. And nobody wants to shake their pride by having to say or admit they had to use the local food bank, but more people than ever before are using it. And this is historically something that I never thought I'd see the day of, John, but for years I've been touting support our local food banks. So please, thank you for listening. And if we can be of any help, John, give them the numbers, the website. We're here to accept those calls.
Guys, we are done for another week, so get out there and get educated. Make that call, and as Darren says, get onto the website, deltaharbor.com. Harbor with you, because it's a Canadian website, of course. It's all about you, deltaharbor.com. And, of course, the usual social media outlets, more information to be had there, whether it's YouTube, Facebook, Twitter, Instagram. It's Delta Harbor for all of that. And finally, the phone number. Phone call has always been good and always quick and good to have a conversation. 1-877-323-GOLD is how you do that. And we'll catch you next time in the Hard Money Podcast.